Greetings, this is Dr. Jeffrey Scott. This is my Market MRI Pro update for April 30th, 2025. Title this one will Blowout reports by Microsoft and Meta propel markets higher. April has ended, and if you look at the performance of the indices, the only one positive was the Qs, and the laggards was the Russell down, looks like about 2.3%, and the Diamonds 3.2% on the month. So tough month. The last day of the month, today, actually could have been a horrible day, especially as the GDP turned negative. But it was one of those days where your markets opened up very low and ground their way higher into the close. And now we've got some blowout earnings to talk about and see how that impacts the market. As always, these programs should be considered educational only. Anything I talk about should be considered in the spirit of education and not investment advice. The intent of the video is to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk. You and your owner are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock I mention. Trading stocks and options should be considered risky. You should always consult with your financial advisor before making trades. Folks who've been around know I've been doing this for over 20 years, and I finally put my stuff into various tools and platforms, including one that we'll use tonight called Market MRI Pro, which is my platform. Now, Orange County. Boy, this is a timely slide here. June 6th to 8th, Resident Inn and Suites, Tustin, Orange County. We are filling up the room, which means there will be an internet option. Now, here's the trick. It's $300 to the end of April. That's tonight, but he's in Pacific Standard Time, so it's 9 o'clock here. It's only 6 o'clock there. There's still 6 hours to get in at $300. If you don't know if you can be live or not, if you don't know you can even be there for the internet, it doesn't matter. You'll get PDFs of my presentations. You'll get video recordings of all the presentations. So sign up. For more information, please contact Greg Mills at gam72054@aol.com. I've confirmed John Person, Dan Fitzpatrick, and Chris White. All of them are traders, great speakers. And I think, they're people I've been watching for a long time, and I think they're of value. And then perhaps Matt Caruso will join us. I haven't had a second confirmation, but I got one initial confirmation. So if I get a second one, I'll turn that one into the rest of the list as well. Google Group, top-down trader. I started this because I don't hold a mailing list. A lot of people wanted a mailing list. I sent it to friends and family, and I came back as spam. So no mailing list. However, if you want to get notice when I put the videos up, if you want to interact with a small group, you've got 100 members, join. It's free. As a matter of fact, it's even better than free because this Saturday I'll be doing for the Google Group a seminar on top-down investing, looking at the principles, philosophy, and tools. I'll be looking at a lot of programs, HDSI, TradeStation, TradingView, Wealth Charts, and of course my new program, Market MRI Pro. And I'll show you how I've integrated my tool sets into each of those. Also, it's going to be the official launch of Market MRI Pro. I'll talk about that in a second. How do you join Top Down Trader? You go to Google Groups, you sign in, you search for Top Down Trader, 3 separate words, and you join. You indicate how you want to be contacted. I'll send you. I will update my list probably every night at 10 o'clock. We'll get you in, and you'll get a link through the group for the webinar. Hope to see you there. They are fan favorites. Everybody loves them. Unfortunately, it's the same people, or fortunately, depending on how you look at it, over and over that come back, which must mean there's value to it. And love to have new people join the family. No cost, no obligations whatsoever. And even if you don't want to buy my stuff, come anyways. I'll teach you how to use the tools you already own. Know your news and earnings. Let's see. Today was the GDP disappointment. And I guess the PCE didn't really matter because the GDP just blew us out of the water, coming in negative versus a positive 0.4 expectation. What do we have on Thursday? Jobless claims. Final manufacturing, ISM manufacturing, construction spending, and auto sales. So some market moving news, but I think the big news is going to be earnings. If we look at Wednesday night, Microsoft is currently up 7.8%. Meta is up 5%. Robinhood beat, actually traded down for a bit and then traded higher. Those are some of the big movers. Align, ALGN, is up 11%. And TTMI is up 12.9%. So futures are up big right now, really I think because of those earnings, and we'll see where we end up. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. And if you think about what we have after hours on Thursday, Amazon and Apple, the big A's. Amazon clearly is impacted by tariffs as so much of their goods come from China. It'll be interesting to see what they say about going forward. Apple does all their manufacturing, or so much of their manufacturing there. So I think it'll be an interesting report. So the market giveth and taketh away. It looks like after the hours on Wednesday, it's giving. Hopefully it'll be the same Thursday if you're long. Top-down trader seminar this Saturday, which is online only. So Saturday is the 3rd. I should have told you the time. The time will be at 11 o'clock Eastern. I will be in Santa Fe at my Santa Fe home. Praveen, the program guru, will be there with me so he can support and then answer any questions you have. For those of you that have already purchased in the pre-launch, we're going to have our official release candidate will come out after the seminar, and it has got some really cool stuff added to it. So look forward to seeing you there. And oh, by the way, not that I'm going to try and beg, but if you come, I'll give you an extra $300 off on your purchase. Now, that $300 would be for people that don't have my prior tools. I may have some additional discounts that I'll offer for people who've paid money for other tools that I have sold. So hope to see you. Top Down Trader is the Google group, and I think you'll find that there's a reason why people keep coming back to my seminars. And if anybody's been to those seminars wants to comment in the remarks so people who have no idea who I am can see that I'm telling the truth, hey, I'd appreciate it. All right, chart time. So we're going to use Market MRI Pro. This is a program that conceptually I came up with some ideas and then Praveen blew me away. So let's start here with we call the daily briefing. Up on the left we have the VIX, Diamond, Spiders, Qs, and IWM. The release candidate, or shortly thereafter, we're going to add the dollar, Bitcoin, and maybe one of the yield instruments, so you can just follow them during the day. This is something that I find really interesting, which is the closing range. And if you look at the range of the close on the instruments, diamonds and spiders led up a little bit, Q's down kind of flat, and then the Russell was the laggard. But if you look at over here, you can see all of them closed in the upper part of their trading range. And why is that important? Because I think that really impacts, to me, any positive or negativity, and this is a positive finding. And volatility was up 2.5%, but hey, it closed in the bottom of its range. Over here, we can look at the new highs at various time frames on the NYSE and the NASDAQ, the new lows, but more importantly, the new highs minus the new lows. And we have gone positive on the new highs on the NYSE, still lagging a bit on the NASDAQ. Go to the right-hand side, 3 indexes, lots of stocks in them. And what we've done is we broke out in blue today's performance versus gray yesterday. What percentage of sectors were positive? A little bit lower than it was yesterday in the S&P 1500. 46% of industry groups, also lower. 45% of stocks were up. On the NASDAQ, 45% of sectors versus 90. 47% of industry groups versus 70. And only 42% of stocks were up. And then if you look at the NYSE, pretty much consistent on the sectors, but only 51% of the industry groups were up and only 40% of stocks. So if you look at your portfolio and you wonder why you've had a bigger move than what we see here, it's probably because on the broader market, more stocks were down than were up. Now let's take a look at the S&P 500 sectors. One-day change, led by healthcare, industrial, staples. Laggards were energy, discretionary, utilities. Tech was in the middle at plus 0.42. I mean, the markets are moving around. Sometimes you'll see all of the defenses on the top or the bottom. That's kind of a mixture. We know what's going to be driving, at least at the open. It's going to be tech. Now, the entire program is real time, but rather than stream it, which is expensive. We don't expect you to be watching this one screen 24/7, but every time you want to get an update, you hit refresh, and it takes 2 seconds, give or take, to refresh. Where after hours, you're not going to see anything happen. Here, we can look at themes. Cannabis, this thing is all over the place. Yeah, it was a massive move in the market on Wednesday, up 12%, 30% in 5 days, but it's still down over the last 50 days, 3%. But you could see marijuana, cannabis, it shows my age there, Southeast Asia, silver, video games, biotech. These are some of the themes that are working. Why is this chart important? Because during the session, I'm able to track the various themes and figure out what's leading and what's lagging. Look over here at the range, even at the ones that lagged perhaps. The range is pretty far to the right, just telling you that the market really improved as the day went on. You know that, you watch the market. My buckets, it takes every stock in an index, assigns a percent B. Percent B is where you are between your Bollinger Bands. We created 10 deciles. Ian Woodward taught us this decades ago. And then we have this one which is below and this one which is above. And we look to see the distribution of stocks. In an overbought market, we start to get this one above grow up to 20 or 30. In an oversold, you see the stocks underneath the Bollinger Bands increase. We have a neutral stance here. So we're neutral. Market breadth, I took a number of different tools that I use and I put it in one slide, or at least I had Praveen put it into one graph. On the left is the NYSE, on the right is the NASDAQ. And look at this tail, this bottoming tail that formed on the NYSE. It opened at 19,089 and it closed at 1911. So it closed up a little bit. It dropped all the way down to 18,753. This was a open on weak GDP and a close when I guess we realized it wasn't the end of the world. We were down at the close on the NASDAQ, but way up off the bottom. Here you can see volume. Volume was nothing special. This is stocks above the 20, white is above the 50, red is above the 200. At extremes, you'll find specific patterns. We're at an extreme on the very short term. We became short term overbought. But look at the breadth thrust that we saw in the stocks above the 17-day. Massive. Now, down here, I've got three things I look at: new high, new lows, positive on the NYSE, negative on the NASDAQ. Advanced decline, negative on both, and then up, down volume, negative on both. So it was a negative session in the markets. We'll come back to ratio charts. If we look at the timing brief, I have a built-in timing model. This is the weekly charts. And in my timing model, which I'll go into great detail that you construct your own at home, if you could join the Saturday video, I'll tell you the secret sauce. This is the line, the buy-sell line. And what you could see is we are still in a sell on the weekly on each of the spiders, the Qs, Russell, and the diamonds. When I look at the dailies, however, we have turned into a buy signal. So we are officially in a retracement in a downtrend. Now, I use this as an opportunity to sometimes add some stocks, but I do it in a very careful with stops manner. I don't know if this retracement is going to continue, take out resistance and go to new highs, or are we going to fail? Now, speaking of failing or potential failing, if we go to the US indices, you could see a very similar pattern of things. Now let me extend this one. Here we go. At least on the spiders, we try to get above the 50. We kind of pull back. Clearly, we did not break above the 50 on the Qs. Again, the open candle tells me it closed higher than it opened. Red says it was down on the session. We're approaching this trend line in the 50 and the diamonds, kind of pulling back a little bit on the Russell. VIX has come down, but not to the level it was before the markets started to turn up. And you can see the US dollar is consolidating after pulling back pretty substantially. The question that exists in my mind, and we'll find out probably tomorrow, is will we have the strength? I mean, so many programs and so many different ways of doing this. To break above the 50. And that, I think, is going to be what I'm going to be looking for in the markets on Thursday is, can we break out? A breakout is not clear sailing. A breakout says we're going to go up to that 200 and test. But a break above the 200 will have me getting a little bit more bullish than I am. Now, mind you, I'm still thinking about buying more, but I'll feel a lot better. This is the weekly chart. If we can actually continue, and then when the weekly, you could see we've got the 50 weekly. So there is all kinds of overhead supply and resistance, which says we're likely to fail. But we're retracing in a downtrend. To me, it's okay to be looking and adding stocks, but be well aware that we could fail at this point. So have your stops. Commodities, you'll see gold has come down as the market has improved some, as has silver. Over here, we can see oil collapsing a little bit. And then natural gas trying to hold at the 200. Make sure I got the right. Actually, let me just make sure that's updated. Should have done that before, and there we go. All right, so the stocks have updated. Interestingly, so, there must be I wonder if it's a change in the future symbol. I'll have to check. I guess it has updated. All right, you could see that the 10-year and the 30-year both opened lower and closed higher, and I'm sure they opened lower because it looks like we could have been going into a recession with the GDP low. Bonds probably shot up as the stocks dropped at the open. That would have caused the rates to come down, but as the market moderated and reverted to the mean, they would have reversed. All right, so we've now done a pretty significant, substantial top down from the market's perspective. At the S&P sector level, I like ratio charts. And so the left is Bitcoin versus the spiders. So we're going to ignore that one, the top upper left. But as you'll see, we can see what the different sectors are right here. A ratio chart basically, to me, normalizes things. So if I want to look for strength, I see technology is working its way up. If I want to see weakness, I could see how staples has come off its highs, utilities, real estate, and healthcare. What do we call those? We call those defensive plays. And if they're coming off their highs, hey, that's not such a bad thing in my opinion. All right. Anything looks strong of what's left besides technology? Not really. That to me looks like the strength in the market. If we go into my layout called the JAS layout, I have all the stocks in the NASDAQ, the NYSE, and the Amex. I filter them for $1 and 100,000 shares. Right now there's 3,529. And then I'll go to top down, which puts them into sectors and industry groups. I look to see what had the biggest move, consumer cyclical. So that would be discretionary. And I would look down here. Here's the industry groups in discretionary. I might pick the top 3. And then instead of looking at 1,246 stocks, I'm going to rank these by percent return as well. And I might take the top 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So let's think about what we did. We went and we looked at the markets. We said probably okay to be long here. Be careful because where we're sitting. But I'm more long than short. Okay. So then I looked at the leading sectors, the leading industry groups in the top 3 sectors, and now I've built out the stock list. And I could look at them from a one-day return, and let's just go down some. This is a takeout, Regulus Therapeutics. Don't know this one. I like uptrends with a pullback. Now I'm seeing cheap stocks, so what I'm going to do here, and I won't buy something less than 5 typically, so I'm going to put a filter of $5 and 500,000 shares. We'll hit OK, and let's take a look again. Healthcare, biotech stock breaking out. I'm just looking for something. Now, Wingstop is interesting here, well off its highs, and to be honest, I never understood the fundamentals on this. Here I can take a look at those fundamentals and see that it does have some pretty big growth looking at earnings that came out today. Whoa, 324 versus 98 cents. Great big surprise. Revenue $17 versus 14.58, so growth. Interesting, a surprise on earnings, but not revenue. This looks interesting and something that I might want to take a look at. So I might copy this to a one of my lists. So let's just, I would like say, I put it in list C. Now I might be curious about news. We built in news too. And let's say I want to read that earnings transcript. I give you the link. It takes you to, whoops, sorry about that. Didn't mean to kill that. And press and hold to prove I'm a human being, and it's going to go to Seeking Alpha, and you'll be able to see what they share with you if you're not a member. Okay. And there you go. You can get the whole transcript. So I think that's pretty cool. There. Let's just go down the list a little bit more. Trevi Therapeutics. This one looks really interesting to me. I am in healthcare. I don't know this company. Gap up, sideways move. Gap up, sideways move. I think this guy might be ready to go again. Trevi, TRVI. So I might add to my list. Eurogen. It's interesting that these are all healthcare stocks. Nutella, Arcus Biosciences, Veristem. They've got a drug that's potentially going to get approved, and it's moving up nicely. VSTM. So I would go down the list and see if there's anything that I like. I could have done this differently. I could have not started with sectors, and what I could have done is I could have looked at a much larger group of industry groups and just taken the top 10 here, and there may have been some here that would have been different, such as semiconductors. Cuervo had a big move. Now, Cuervo's still very far down its pattern, and we can see they had a 40% surprise on earnings and revenue. Huh. $1.42 versus $1.39, not that exciting, but the market, it did much greater than what the street anticipated. I love the fact that we have built in earnings, we've built in news on all these stocks, plus a number of indicators, which I'll go over in great detail on my Saturday video. Let's say I don't really want to do top down. I could go back to this impulse here. And since I put the filters on, we're a little bit less than 2,000 stocks. And then I've got a number of indicators I look at. Let's look at pullbacks and uptrend. Let's look at $5 and 300 and 300 and 500,000, which are already added. And let's add the 2-day momentum up. So I'm looking for only things that were in an uptrend that pull back and now have momentum and moving higher. So let's see what this one shows us. All right, so yeah, it's in an uptrend from here, breaking out. This one doesn't do anything for me. Okay, so nothing today with that signal. So let's kill that. And let's go in. Now let's just look at without any filters at 2-day. I'll just see 2-day. Let's leave the price in the 500 on. I don't think it's good to take those off. And the only thing is still Clearwater. All right, take off the 2-day momentum up signal. And let's look at the multi-time frame CPR. All this will be explained. A lot of these. So these are stocks that have to have a weekly uptrend and a new daily. So that's ABEO again. Alchemy. Amylyx. All right, I like this one. Why do it's cheap. I'd have to make sure it's got enough volume for me. But we have an uptrend. We've pulled back to the 17-day and we moved up with momentum. I like that. So I basically use various tools to find the stocks that I want to buy, Budweiser, and see if anything looks great on my way down. Now I've looked at a bunch of stocks today, and I'll just show you two that I liked at this point. One of them is a healthcare REIT. I love healthcare REITs. They pay dividends and their risk of going out of business and having default on their customers is really low. Here's one that came down. It's now trending up. Had a nice candle off the 200. And these little blue dots tell me it had a breakout in momentum from a squeeze. Relative strength and OBV look okay. And this one probably pays a dividend. So I look over here and it pays a 7% dividend. So I like OHI. That's probably the one I'm going to focus on in the markets on, what day is tomorrow? Thursday. And then the other thing I'm going to look at that I liked tonight when I looked at it was it NOMD? I'm not a big guy into buying food stocks, but this one looked interesting as well. NOMD. Big uptrend, pull back to the 50, which we like to call free parking and a breakout. Down here, I could see we came out of the squeeze and we have a breakout momentum and volume. And this one looks really interesting here as well. So, went through the markets, showed you what industry group, looked down at the sectors, some stocks in the leading sectors and industry groups, and then went down more of a bottoms-up approach. I hope you like this. This is a powerful tool. Join me on on Saturday for the seminar. Maybe somebody will put something in the remarks section. The same people come back every time, which means it must not be a waste. So hope to see you there. Join Top Down Trader to get the invite, and I'll do another video tomorrow night. Thanks, everybody.